Hey, Mike Swanson here. I want to give you a little update about my portfolio. This is my real portfolio that you're looking at, and this is the results I've had in the third quarter. I didn't do anything in July, and I started buying some positions in August, which you've seen me do, and I've generated a 14.33% gain in August and September, while the S&P 500 went up 5.76%. How did I do that? Well, let me show you. Right here, these are the positions I'm owning right now. This is the number of shares, the price I paid for them, and whether I've got gains or losses on them. So out of all the positions I got right now, I've got losses on two of them. One of them's down $2,200. It's a French telecom company, and the other one's down $1,500. Remember these symbols, FTE and TNK, because I want to show you something about them in a few minutes. But anyway, today, right at the moment, I'm up $2,100. That'll probably, who knows what it'll be at on the close or not. That's the gain for the day. All the positions I'm currently holding are up about 30 grand. And the account at the moment is worth $250,000, and I'm on $83,000 worth of borrowed money or margin to buy these positions. Well, anyway, let's look in more detail what's going on in this account. This is the last 30 days, and during that time, I made 11%, and you can see right here the cumulative return. So I had a big surge for that, in a couple days early in September. We ran up to about the 16th or so, and my account, the return in the account, basically made a peak, and it's been going. It dropped down until last week, and then it bounced back up, and it's up today, which isn't being shown here. So anyway, at the moment, the way I see it, my account is going through a consolidation phase, just as I think most world markets are. In fact, I think we're in a short-term peak or pause that will probably end before this month is over, and we'll start seeing things go up again. And the key is, though, that the sectors and the markets that are the most bullish will go up the most. And that's, frankly, how I generated this great return in the last quarter that beat the stock market. And you can see right here, this is a overview of the different things I'm investing in. No single position do I have more than 10% of my money in, and at this point a lot of them I got like 5% of my money in. So I'm well diversified in different things. And right here, I actually sold a little bit to free up that margin I was on. I was over 80,000, so I'm in a position. I'm going to add a little bit of money in the next week or two, and I'm going to be in a position to buy more this month before I think things break out and really go up again. And I think when they do break out, they'll probably be going up through the rest of the year. So here's this cumulative comparison, in greater detail. And here is it compared with the rest of the stock market. So you can see that, I've been outperforming the market, then I dipped back down a little bit. So the question is, how did I achieve this outperformance? Okay, that's what I want to talk about. And the way I did it, again, was being invested in the right stuff, the sectors that are in real bull markets. Well, the S&P 500 went up like 5.5%. Gold stocks as a whole went up like 25%. So that's how you beat the market. You get invested in the most bullish stuff. And you can see, right, my Sharpe ratio beat that, or the market averages, and I just beat it, And here's another way I did it too, is remember FTE? I told you to remember that, because I was, at the moment, I'm on a $2,200 loss on that position. Well, what that loss doesn't include is the fact that I made $1,100 in dividends by simply holding that stock. And if I continue to hold it for another year, as long as it pays out at the rate it's paying, I'll make 20% just off the dividends. And I made dividends on GNT by holding Newmont and KGC. I made $1,500 in dividends. And I paid $12 in interest back to my broker on the 6th of September for probably for the margin I was on. So anyway, I wanted to show you my real account, my real positions. When you see this, this is just my current positions entered in Google Finance, and it doesn't account for dividends I'm getting. And people I know want to see the brokerage statement so they know that this just simply isn't some numbers I'm typing in on Google Finance, but this is real stuff, right? These are real positions I got analyzed here in this document that my broker puts together. So you can see how I'm diversified. Most positions I have like 6-7% of my money in right now. In no single position, if it went to zero, it would really devastate my account because I'm so diversified in different positions and different stocks. So here's what's going on now. Okay, like I said, I think that we're in a pause in the stock market. Even though the market was up yesterday and is up so far today, I do think overall it's going to go sideways for another 2 weeks, maybe 3 or 4, maybe even 5. But I think the market will break out as a whole. In global markets, particularly the undervalued European markets, will really take off. And I think commodities and gold and silver and the mining stocks will really take off too and go up November, December, and probably even into the spring. But regardless of what happens next year, I think once this pause is over, we're going to have another blast off for 2 months that's going to be awesome to be a part of. In my plan right now, I'm just simply holding what I got, letting this thing sideways activity play out, and I'm going to plan to buy more positions. And when I do, I'll tell you what I'm buying. And I'm not looking to add on to what I already got. I'm looking to buy new positions. So someone sent me an email actually asking me that, and that's the answer. Because I want to continue to be diversified in lots of different things and not have any single one position dominate my account like that. So anyway, this is a quick update. I wanted you to see what I did the last 30 days in my brokerage account and the last quarter. So it was a fun quarter, and hopefully we can keep this up and continue talking about the market together and finding ways to beat the market and do really well and take advantage of things. I really think this is an optimal time to be getting ready to either buy stuff if you don't have anything or add on to your overall account, because this is when you want to buy when the markets are pausing, when they're dipping. You don't want to buy after you've had big run-ups and you're in danger of a peak, but after you get pullbacks and consolidations, which is, I think we're in the middle of such a phase now. So I'm glad to be able to talk to you now about this. We'll continue to do so and be on the lookout for my next videos and so forth. And I'll be talking to you later.